Another popular question that I've asked is how to interpret recent market performance. Where are we right now, and what is the prognosis of going forward for the next quarter or the next year? Now, I'd like to answer that question in terms of two basic indicators that we follow: the market valuation and the market sentiment. Market valuation causes turnaround points in markets. So if a market is too expensive, it will eventually reduce the probability of making additional returns and even start going down. And if the market is ridiculously cheap, it will offer huge opportunities for logical investors to go against the stream and to start investing at other times when other investors are panicking. Market sentiment, on the other hand, is a force that feeds on itself. So if the market sentiment is good, then good market sentiment will tend to cause additional positive returns and additional positive sentiment in the market, whereas a negative market sentiment, think of investors panicking, will cause investors to sell and push down the market even further. So right now the market is a little bit overvalued in terms of market valuation. Our normal value would be, let's say, an 18 level, and right now that level is between 20 and 21. So it is certainly slightly overvalued, but not ridiculously expensive. In fact, I could say that a normal bull market is characterized by a slightly expensive market. So we can tick that one off and say, well, there's not too much concern there. But certainly there are pockets of investors who are worried about a market being slightly too expensive. On the other hand, the market sentiment is quite normal for a bull market. For a market sentiment to be in a bull market territory, we need a value between 60 and 100%, and right now we are 62, 63%. So there's certainly good enough sentiment in the market to allow the market to continue its upward move. But the best way to characterize the current situation is what I call a wall of worry. Investors are climbing a wall of worry, and that's actually a good thing because they are concerned about various things in world politics, in the global economy, the local economy, the strikes locally, the situation in Syria. You name it, there's always sufficient reason for investors to worry about things. At the same time, that prevents investors from being overly positive in the market and thereby speculating beyond a reasonable level. So there's not too much greed in the market, and certainly there's not too much fear in the market. So it is quite a normal bull market, and therefore the prognosis for the next quarter is quite average, and the prognosis for going forward for the next year is at least a 90% probability of making a positive return.